Rich, what do you think? I mean, investors were like peak bearish going into the quarter. So now what?
Look, Melissa, this is fundamentally investors believing that Netflix has gone X growth. Like, I think they are just projecting out and saying engagement isn't really growing much. You know, it's up 2% over the first half of the year over year. And I think they're going, God, it's up 2%. This thing's going to start to slow even more. Revenue growth, which was, going to be 12% for the year ex currency. They're going, that's going to be single digits pretty soon. And so they're literally just looking at this company as like, this has two people have already texted me saying, this is now a legacy media company and like good luck streaming instead of the old good luck bundle. I mean, people are just, this is what it feels like peak bearishness. People just don't believe that there is growth left in streaming, which I think is fundamentally incorrect when you look at this, especially on the advertising side and how fast that ad business is growing, how early it is. But honestly, Melissa, there's no way to disprove it other than just time. And investors right now have no patience for this company, and they're just puking it.
Do you think that's the right thing to do, Rich? Or do you say, no, with peak bearishness, the stock down an additional 9% on top of being down 40% or 30% going into the quarter, you buy it? You
do. I mean, this is when you find the bottom, right? Is like when you see everyone who literally, there is just hatred and everyone is going, there's no belief. I mean, think about it. They're growing revenues at 12%. Margins are expanding meaningfully. They're buying back a lot of stock. They have true conviction in how big Greg Peters said it right on the call. We are still very early in our growth as a company, but investors don't care. And so that's the opportunity. The company's buying the stock. They believe. And I think this is now going to become a show me stock over the next year. They have to prove that there's growth. And, one thing that isn't really being talked about, there is less competition. Hulu's basically being sunset by Disney. HBO, assuming the Paramount deal eventually goes through. We'll see how fast it goes through with the regulatory battles. But eventually HBO is going away and is going to be folded into Paramount Plus. And so the competitive dynamic is actually becoming a lot easier, I think, over the course of the next 18 months in terms of how many different services are out there. But again, none of that matters today. Right now, it's just fear on the engagement report. The company even said, we're not going to report their engagement numbers on a 6-month basis. We're going to every year. Like anytime you pull numbers or pull information, investors think you're hiding something. It doesn't matter whether it's impacting revenues or earnings. People are just nervous. And I think they have lost investor confidence, and it's going to take time for Netflix to demonstrate and prove to people that they can grow earnings high teens towards 20%. Until they do that and put that on the board, people are going to be nervous.
Hey, Rich, so I agree with you. It's Steve. I agree with you. I think peak bearishness is when you want to buy this stock. I'll give you 2 reasons. I think costs are probably rolling over, if not coming down. And then the ad tier. I don't think anyone gives it any credit for ad tier. It's still the best streamer out of all the names that you had mentioned there. It lifts all boats. So when I look at the chart, I think this is a chart I want to buy. I don't want to sell. Just talk to me about the ad tier. Are people leaving that on the side of the road?
This is an ad business that's growing 100% year over year, basically doubling from 1.5 to 3 billion. But the 3 billion is still a tiny number. Like when you look at the amount of time spent on Netflix by the ad tier members, that 3 billion, I think even if they never grew engagement, something they don't talk about, if they never grew engagement again, that 3 billion could be multiple times higher than where it is today. I do think that they're doing a lot of things to accelerate engagement in terms of going into shorter form programming, building out video podcasting. Like there's a lot of things that they're doing. And, I think the most interesting line of the release that nobody really paid attention to was that they said all of the new forms of content they're adding, whether it's, the Jay Shetty show or Jake Shane, like those types of things, they're actually finding people are watching, not in the evening, they're actually watching during the day. And so they think it's incremental viewing. And so when you think about how that sort of compounds over the course of the next 12 months, I think there's actually reasons to believe engagement gets better. And that's obviously important longer term for the advertising business because obviously eyeballs equal advertising opportunities. And so there's no doubt that the advertising is being overlooked. Nobody cares about it right now. It's just, hey, engagement is bad. We're going to sell this stock.